PipSnipers here, back for another update. Let's take a look at DGB over here, and what we can do is we can zoom into the current range that we have going on over here, and this is a Wyckoff accumulation schematic lasting over 685 days. We have our sell and climax, your automatic rally, secondary test, and your failed breakout. After having this failed breakout, you move below psychological support, causing a short squeeze for your secondary test in phase B, prompting the price to the top of the range for your second failed break. Now, once you reach this second failed break, it wouldn't be the most optimal time to be in the market, and the reason for that is because you're going to have what's called a creek phase, and this creek phase usually takes the form of a descending broadening wedge or a falling wedge, or even a descending channel. And usually with every advance that comes in here in the creek phase, it just results in a false breakout. Once you get to the bottom of this wedge over here, or the bottom of this creek phase, you go below your secondary test in phase B, making a spring. You then have your initial advance, your throwback, which is called your test, and then you have what's called a jump across the creek. So you see over here, what you had was 204 days of this creek phase lasting in the entirety of this Wyckoff accumulation range here. So you have your jump across the creek, right? You have what's called your sign of strength. So this is when all of the retail traders get into DGB because they think it's going to be a new paradigm. It's just going to keep going up and up and up. But this over here is when all the media attention comes in and people get too excited. Composite operator brings the price back down for your backup phase before having a continuation to the upside. Now when we take a little bit of a closer look here, we can take a fib from this low up to this high, and you can see that we perfectly bottomed out here at the 70.2% fib, so we can say this backup phase is finished. We also have a nice classic Elliott wave flat pattern, a 3-wave move down, 3-wave move up, and a 5-wave move to the downside. So let's take a look at DGB here on this trading view chart that I have here. You can clearly see the waves, right? This is your 3-wave move down, this is your 3-wave move up, and then you have your 5-wave move down. Taking out the RSI on the 12-hour time frame, we have a lower low on the price and a higher low on the RSI. And we came down to the 200% fib. Okay, so it goes to show you that this C wave is very extended, right? And usually you'll have extensions in crypto in highly over-leveraged markets, whether it's a wave 1 extension or a wave 5 extension, or in this case, a C wave extension. We came down to the 200% fib, and then when you take a fib from this swing low up to this swing high, we also bottomed out perfectly at the 70.2% fib. So going forward, what bulls would want to see is a move above equilibrium right at the 50% at 0.015 in order to confirm that this in fact is our wave 1, and then this over here is our wave 2. Okay, so this is DGB over here. When we zoom out all the way to 2014, we actually see that it's a very similar structure to that of XRP, in a sense where it was created during the same time, right? We had our wave 1, 2, 3, 4, and 5, right? So a very explosive move going into the 2018 peak. Then for our 2018 to 2020 bear market, we had a 3-wave move down, right? Very similar to that of XRP. A 3-wave move up for our B wave, and then a 5-wave move to the downside for our C wave. Now, within this B wave over here, starting in March 2020, you had a lot of people thinking that this over here, the correction was done, right? Similar to that of XRP. During this March 2020-2021 run up, people thought that we would actually go ahead and break this all-time high and then go on for a new bull market. But in reality, this over here was just a B wave. So you had a 3-wave move down, 3-wave move up. In this case, we swept our buy side liquidity and then had a waterfall move down in a 5-wave fashion for our C wave, bottoming out at the 78.6% fib, measured from this wave measured from this A wave low up to this B wave high. So this is DGB over here. Nothing to worry about at all. It looks like we're coming up for our third wave here, likely towards the 70 to 78.6% fib. See a little bit of a throwback, maybe 38.2 to 50% of the way, and then finally finishing up with a fifth wave extension, finally taking out this last all-time high that we have here. So I hope you guys enjoyed the DigiByte video. If you want to stay updated on DigiByte, please click the link in the description below. Peace out and take it easy. See you in the next one.